Your silver outlook comes out in December. I saw a preview of it where you're expecting silver to really rally. It's kind of become, we kind of stopped talking about silver since there hasn't been any action in the metal for quite some time. But as we all know, silver can surprise people and can break out. You're expecting levels that we haven't seen since 2011. Let's talk about your bullish case here for silver.
Yeah, we were actually, we update our 10-year projections, supply, demand, and price every year, at least once a year. And, if you go back a year ago when we released our 2016 projections, we were talking about silver possibly getting up to about $28 an ounce on an annual average nominal price basis, by 2021, 2023. And now what we're saying is we think the price will get around 38. And the difference is that there's been some tightening of supply and demand, but what we really did is we tweaked our model. And the issue with silver has always been that the silver price is one of the two most volatile commodity prices in the world, and it's very hard to model such volatility as you've actually seen in silver prices. So if you take our supply-demand model and our macroeconomic view of the world, and you say, where do we think silver prices are going to go? It solves for about $28 on an annual average basis. But you look at that and the standard deviation of price changes in those projections is about 1/5 of the historic norm in silver. So if you adjust that to account for the historic volatility of silver, instead of $28, you get $38. And $38 was the annual average price in 2012. So what we're saying is that if you take into account the real world volatility in silver prices, it is quite possible that by 2023 you'll see silver prices average about $38, which is the peak average that you saw in 2012.
Let's focus on the supply side of silver, since I've seen very differing numbers when it comes to whether we have a silver shortage or not. What figures are you seeing?
We have shown surpluses in silver since 2006. And we have done silver research since the 1970s. There are people who have talked about persistent deficits in the silver market, and they're simply wrong. They've been wrong the entire time they've been involved in the silver market. And one of the things you do is, if you are trying to do silver market research or any commodity research, you look at surpluses and deficits, and the surplus deficit is calculated as total supply less fabrication demand. If you were trying to promote metal, like certain industry promotional organizations do, then you throw in investment demand so that all of a sudden you can say, oh my God, there's a deficit. But that's not the way you're supposed to do commodities research analysis. And if you do that, you get these deficits, and then you're surprised when the price doesn't respond. If you do your economic analysis properly, and you keep investment demand as an off-budget item, then you have surpluses, and the price matches your supply-demand analysis almost perfectly, which is why we have such a good track record calling silver, gold, platinum, palladium.
Jeffrey, Christian, thank you so much for your thoughts today.
Always a pleasure.